Alright, boys. Enough of Slash for now. So, interesting day. So this is day 3 after the Brexit. And so the reaction the market could have done really depended on the appetite for traders to sort of push lower. Now, given that what we're talking about yesterday, that it is more of a shock than a crisis, then what you may see in this particular scenario, rather than say something along the lines of a Chinese devaluation or European banking issue, is that you may start to see more vicious snapbacks, more sharp reversals, as bargain hunters and short sellers take profit. Now, the initial reaction today in Asia was, I mean, it started off pretty slow, and then it got pretty aggressive towards the end of the session in terms of the Nikkei, in terms of risk appetite changing. It didn't get out of control, all right, but definitely gave the European session a good foot to stand on, and we did open around about 200 points higher on the DAX here from where it closed last night. So, you know, this is an interesting day because, you know, day 3 where you have a reversal. Really, what we're trying to do here is we're trying to see how high the market can get before we sell again. You know, there's nothing really advanced about what we're going to be trying to do today. You know, what you don't want to be doing probably at this moment is trying to chase the market. Okay, and that even revolves around hopping on to say long Aussie or long Kiwi or short dollar CAD. All those trades were fine about 80 points ago. Yeah, about 80 pips ago. Now we're getting into the real battleground. So in terms of key levels here on the DAX, very likely that if we sustain this rally or substantial part of it into the US session, that the US traders who love to buy dips, to love to have some topside action, especially on news which is not directly related to the US, you could see them definitely running with this. All right, so potentially we are going to get that next session move. But later on in that US session, I think that's when the danger sets in. That's where we got some heavy selling last night. You know, towards the end of, say, the European session inside the US session. That's when you saw the day lows there in the DAX. What is noticeable though is that we didn't break into fresh new lows on a number of key pairs. All right, so apart from the pound, which is, you know, which you could probably expect it to have broken new lows, some of the key pairs like the Aussie and the Kiwi and the DAX didn't break into fresh support. You know, did break support, looking for fresh new levels to go down to. So this is half the reason I believe that we got the rally in the Asia session today. You did get a little bit of murmuring from the BOJ that they're announcing or considering to increase their stimulus dramatically, but I mean, no one really cares about the BOJ at the moment, and so it seemed to be more about just the momentum sort of fizzled out to the downside, a little bit of stability. Where do we go? Start the short squeeze. All right, let's see how much we can push this. All right, so the top side is definitely in focus right here, but the trading plan should be built around trying to sell into this. Right, the bears are in control until otherwise proven. You know, you don't really want to be testing the risk appetite of the market. You know, this 200-point rally is fine. Right, to imagine a scenario where we go above, say, 9,700 in the DAX, that's going to require something fresh, something probably around a second referendum. There was murmurs of the second referendum early in the morning today. We had the UK Secretary of Health coming out saying that if they renegotiated immigration policies with the EU, they can have a second referendum. But that was sort of shut down by the Prime Minister Cameron yesterday as well, saying that they had to respect the rights of the voters and that they've made the decision. Right, so, you know, but the thing about Cameron is that he's actually stepped down. Right, he stepped down from being Prime Minister. So the person who's actually going to pull the trigger on his promise is not going to be him. Yeah, so there is a scenario, I think, where you can get those leaders, those new leaders, sort of reneging on the pre-referendum promises, and potentially, if sentiment gets enough negative, and they do polling, where it says 60% want to stay now, or and stock market's down 10-15%, and the EU saying they're willing to compromise, yada yada yada. I mean, potentially you're going maybe not to a referendum, but you might be going to a general election where one of the parties wants to stay. Okay, and that all those scenarios, all that sort of speculation, anything which allows the UK to stay, whether it's realistic or not, can spark that sort of short covering rally. And the market was really in the mood for such thing this morning. So that's where we are. We're having a little bit of a bounce. You don't want to view it more as anything but a relief rally, anything more than a little short squeeze. So far, I mean, the pound hasn't really got too far, so it's not real. You can't really read into it saying this is any sort of bottoms in. So we'll talk about how that comes across onto some of the favorite pairs. All right, so hopefully some of you saw last night, because we're going to draw upon what we talked about last night in sort of understanding some of this price action that happened today, especially the US session last night. Just one sec, we'll check the questions here. The BOE 250 billion. I mean, they're not going to do that unless they need to do that, and that's more liquidity, and liquidity is not a problem at the moment. And yeah, so you really want to wait for the banks to be screaming, for there to be blood on the street before you expect the central banks to step in. And so let's get on to the commodity currencies, because we talked about them a lot last night. So we're talking about selling them yesterday. Turned out to be a good idea if you took profit this morning. My time, Asian morning. Alright, so what happened? What happened here to really roll over the Aussie, the Kiwi, and get the dollar CAD pushing through 130? Alright, the main catalyst, and the thing that I was suggesting you guys watch yesterday to see when the commodity currencies break, was not just that the stock market started to push lower. That was the open there of the US session. Let me get the exact time. Open here of the US session. You saw the market initially go negative, but also combine that with oil. Okay, this is the US session yesterday. Just low, right? And the reason that you then turn to see if this is the whole commodity complex being broken, I suggest is you go check quickly what's going on with, say, Euro Aussie, right? Because Euro Aussie will tell you if it's going to be straight Aussie weakness and whether it has substantial room to move here. And so some of my time frames here are a little bit off. So this is that ramp up. Okay, this is at the US session open. Yeah, so this is real straight commodity currency risk off, oil down, breaking key supports or key intraday support on the Aussie, Kiwi, and CAD. Right, so that was that potential punching lower here. Okay, now that was all good, and this morning, if the Asian stocks went lower and oil didn't bounce, and we'd broken down the bottom here, we could have a really different conversation right now. Right, but about the most bullish thing happened for these particular stocks. But given that the market did have an attempt lower, right, they're not out of the woods yet. Right, this is actually quite bullish price action that we found support above the previous low, and it did hold all that pressure. Okay, and you look at the Euro Aussie, it is rolling back down a little bit, Okay, but they're not out of the woods yet, and you know the Aussie and the Kiwi here now really have just told us where the key support is. Yeah, that's just really. If you think that this is going to fester into something worse, and the stock's going to continue to roll down, all right, then my argument is that eventually the way of least resistance will be pro US dollar strength, and the US dollar strength will break through. I'm not saying that they're going to be as weak as the pound or the euro, but I think that they will succumb to US dollar strength. What's the counter argument to this? The counter argument is, look at the price action, man. In every other crisis, by the time the stocks are down 5, 6, 7, 8%, these pairs are in full downtrend mode. Okay, they haven't gone down. They've still got their AAA rating, all of them. They're all high yielding currencies. They're all not related to this crisis, right? And the best argument I heard is that investors are going to need to diversify away from Europe, and the best way to do that at the moment is to add risk from Asia. And that started me thinking that perhaps, you know, we aren't playing the old risk on, risk off with these currencies anymore, and they are maybe going to hold up a lot stronger than I thought. Not be totally immune to, say, a 10% correction in stocks from here, lower, or bear market in stocks. I mean, bear market in stocks and these guys still rally, that would be something special. Not impossible, but very hard for me to see that coming through. So yesterday I was pretty bearish, but also I did say that the price action was pretty impressive already. Today I'm actually quite neutral. You know, you just have to be impressed by the resilience of all the commodity pairs, and if they don't want to go down, you can't beat your head against the wall. All right, eventually they may go down, and if they do break these levels, okay, then we know where we can get more punchy and get aggressive on the downside again. All right, but if they continue to remain range bound and just grinding lower against, say, the pound Aussie and the pound Kiwi, and the pound CAD and Euro Aussie and Euro Kiwi, Euro CAD keep on grinding lower, you know, and they just don't seem to want to go down, then let's just respect that, yeah, in the market. I'm going to keep an eye on oil though. You know, I'm not completely convinced about this whole story just yet. If oil rolls over, breaks 45, I think that would really just break the back. And once you really, I think you do a bit more technical damage to these pairs, I think the market will quickly remember some of the old days and how we used to treat them, which is a lot easier to trade because they'll be falling fast. You know, so yes, I've gone from bearish to neutral relatively quickly, but it's the way. You know, you got to be flexible. Top side, I'm not ready to buy. Okay, I'm not ready to buy. Definitely ready to consider selling on rallies. I'm just not going to sell today. All right, I might sell a little bit higher if we get a nice level on the Aussie, 75ish. But no, just definitely not looking to buy at the moment. I can be convinced of that in coming days. You know, from a neutral position, it's a lot easier to change into that bullish. I just have to be more convinced that we are going to hold up, and you know, just see the price action continue to sustain strength. All right, so the commodity currencies, that's pretty much done. Euro's pretty resilient as well. It's almost like it's hostage to this whole scenario and it doesn't want to go down. I suspect that the next bit of negative news will be out of the Eurozone though. So of all the currencies that you're looking to play strength against the US dollar, this is probably the most dangerous to go to sleep with. You could wake up and Netherlands is having a vote, or just about any of them, right? And that's when you get the next wave. All right, if it's coming, it's going to come from there. So just be a little bit careful there. That actually makes the Euro pound a little bit less convincing that we're going higher. It's at 83. I would be careful of that. And I'm actually looking at Euro Pound as one of the ways of expressing pound strength as well, when we get down to maybe some nice levels. So when the pound's at 130, you can either buy the pound against, say, if you're inclined to sort of go against the market, you can sort of look to buy the pound against something. A lot of traders are looking to buy dips on pound yen, hoping the BOJ will help out. A lot of traders, though, are also looking at the euro pound, because if things are okay, euro pound's going back down, and if things are worse, right, the only way they get worse is if the eurozone gets contagion, and if the eurozone gets contagion, the euro itself has more room to move than the pound right now. So it's becoming more and more asymmetric, the risk to be short the euro pound at these levels. I would really be more attracted to, say, a level around about 85, and you might get that if the pound's down at 130 or below 130. So that's just something to keep in the back of your mind. Keep an eye on the oil, like I said, as well. Oil is almost the kingmaker here for the commodity currencies, definitely for CAD, right? But I mean, all the commodities will respect the movement, or the commodity FX block. Surprisingly strong. Yeah, how many times we got to fail at 50 for us to go substantially low? I mean, this price action, this sort of movement could be done in a day, could be done in half a day. We're really settled down, and there's so much room to the downside if we were to really break 45 that, you know, that would lead to more considerable movement on the CAD and on the Aussie, but we're just not getting it. So, you know, that's surprising to me. And the longer that we hold, the more likely we go back above 50. I mean, imagine if we get back above 50 now. There's just, right, that just sets the bullish case where we can talk about buying Aussie and buying CAD. You know, the US is not raising rates, and you know, the commodity might be a bright spark in the global outlook. All right, so what have we covered? All the commodities, the euro, the pound. Yeah, so look, we broke 132.30. Didn't punch much lower. Was actually very stable here, no sharp smackbacks. Haven't really bounced much. This is very weak. All this is not strong. This is the buyers are not in control at all here. Okay, so you're really looking that it seems like a matter of time before we go lower here, and unless something comes out pretty soon, you know, it's just a matter of time before the sellers get more aggressive. Yeah, so it's like they're marking time, just having a break. Think of it more like that. And it may be waiting for the stock market to find some resistance and for it to roll back down for its next little plunge, and then you can take the pound with the pound yen to that 130 level. I think that's what's going to happen, probably this week too, Thursday, Friday. Alright, so that's the way I see that unfolding. I'd be surprised if we get above 135 without major positive news, given what's happened so far this week. It'll be a sort of slow burn lower, because we are so low. It's just hard, right, to be punchy at these levels for the sellers, but yeah, there's just no reason to buy. You know, small bouts of profit taking. That's about it. Alright, so let's have a little look at the research now. See how the other analysts are approaching the market. That whole diversification angle that I was talking about earlier, about why Asian currencies like the Aussie and Kiwi, Singapore dollar, will probably get support in the Brexit crisis, in a Euro contagion. That was in an ANZ paper. ANZ's a big bank down here, and they're actually quite good analysts. So we'll have a look at that in a sec. But let's just check on the questions. Dollar index. Don't trade it much. It's definitely going to be bullish though. At the moment, it's a pretty clean way, right? It's a pretty clean way of expressing US dollar strength. What's that? 95. Let me have a look. $96. I mean, if you're talking about buying it for the retest of the 100, yeah. I mean, there's worse trades out there. It looks bullish, doesn't it? Where are we looking about buying there? You want to buy straight at spot, or you wait for a retracement? Bit of good news. When I draw these horizontal lines, I'm trying to get as many sort of candles as I can from previous days where the wicks come down. So it's not just here, I'm also looking back further and further. I mean, I suppose 95 would be great, but would you get 95? Probably not. If you get 95, there might be a problem. There might be some good news out of the pound that changes the whole scenario. I mean, this is a safe haven below, right? You're buying safe haven. Maybe rather than buying, say, US dollar, you might look at gold. Gold's a pretty straight safe haven buy as well. So yeah, dollar index long is not bad, but I think gold's probably cleaner. Should I got a little account. Maybe we can put a couple of these trades into the account and just see how it goes. Just make sure it's the right account. I don't know. Yeah, that's got enough margin to do some small trades. I'm gonna have some discretion here on some of these trades, alright? Wings FX. What have we got done? Selling the euro. Don't mind that. Don't mind that trade at all. Where's your stop? 130. Take profit. Yeah, not a bad trade. Alright, what else we got? Mammon, long pound. No, we're not doing that. No, sir. Short the Aussie. No, we're not doing that. Long the Aussie. No, we're not doing that. Long Kiwi. Long dollar CAD. Of those two, I'd probably rather do... yeah, let's not do any of those. Some short euro pound. It's a bit of a freight train, right? Alright, let's just do that. Where's he got his stop? 84.20. Not a very good stop, in my opinion. I mean, this is a counter trend trade. I think if you're going to go in, just go tiny and then add a little bit more, get a better averaging. This is not even good risk reward. In terms of it's 1-to-1. TT01, I thought you traded the risk reward at least. Alright, let's put a put a stop profit a little bit lower. This is so this is going to go down when if there's a euro problem, or if there's a good news from the pound, and if there isn't, the way that it keeps on going higher is if somehow the eurozone's contained and things fall apart in the UK. You know, at this point, right, cutting rates by the BOE would probably help the pound rather than weaken it. Might shore it up. What do we got here? Last one that is on the king. We're going to get 8 actually at the moment. Short Aussie Swiss. And you're stopped out already. So yeah, let's not do that. Jack should. Oh, so we got a couple of trades from there. I mean, look, I don't mind going in counter trend with the Aussie trades and the Kiwi trades. It's just like I said, right? If you're going to sleep during the US session, then you have to be pretty sure that you got some upside movement here, and you don't really have clean upside movement unless the US wants to punch along. And so, yes, 80 pips lower, it was a great little buy as the market turned. You know, that was the euro. That was basically when the market started to rally there in the Nikkei. Now it's the risk reward that it just is not there for me. All right, so no offense to those traders. Well, I'm risking only $20 anyway, but it's not too bad. All right. So this is the article I was talking about earlier. So ANZ's a big Australian bank, and they're talking a little bit about what it means for Asian markets. I'll remove my fat head from the frame. Hey Potter, did you catch the start of it, man? Basically just gone neutral on the Aussie and the Kiwi, given the price action, and looking to see how big a relief rally you get today. But generally we're looking to sell into everything again. I mean, there's a way to trade where you make it a lot easier on yourself. I spent a lot of my first 5 years trading, like 2007 to 2015, trying to pick bottoms, trying to pick tops, trying to be right. But really, you know, we're trying to make money, we're not trying to be right, and it's two different things. This really is not the game for egos, but most traders have them. You see this bloody China tension. This is what wiped me out last year. Look at the volatility that caused. You know, that's just... It was like 8 days in a row selling. I should have just taken a week off, right? So the Brexit's still got a lot of room to get more dangerous. It has been relatively contained. Yeah, some trades are good levels, Potter. I think we might get another level though, another little push here from the US session. So I'm just going to wait off selling the Kiwi and Aussie, or selling the pound and selling the euro. Don't mind selling the euro and the pound more than the Aussie and the Kiwi. The other trade is dollar yen. We didn't talk about dollar yen. We'll have to go back and talk about dollar yen. Yeah, so these guys are just talking about European responses, right? This is something I haven't looked at actually. Views of the EU: approve, disapprove. So Greece and France. Yeah, France seems to be the issue. I don't know. I mean, I'm not an expert on French politics and what's going on over there. I know that there's extreme right-wing anti-immigration party, French First, and I know that French are pretty nationalistic in most times, right? But I think they're pretty predisposed to staying in the EU. I think they like to have a smaller EU maybe, just with a core, and I think they want strict anti-immigration rules. Unless maybe they don't appreciate the Baltic states, the southern European states. Trade Wizard asked, what do you mean wiped you out? Just wiped out my trading account. Didn't kill me completely, but it just took what was in my trading account and what I could max in my credit cards. I didn't have everything in there, of course, but it took me back 6 months worth of earnings. It was just pretty retarded. Broke my signal as well. I was a trader here for a long time, but after that, it's just trade for myself now. Trading for others is good if you don't want to if you don't care what people think. I just didn't want to disappoint traders, and it led to taking too many risks and also not taking losses quick enough. So it's easier to be when you're not being judged. It's easier to do the right thing sometimes. But I never let my trading accounts get too big anyway. I always withdraw. If you look at all my FX books, I'm always withdrawing money from them. Just keep down to levels that I'm comfortable with. So I think that was not only, but it was, it wasn't crazy money. I think it was 50k. That's with maxing the credit card, so not nothing, but recoverable. It's good to have a wipeout every now and again, so you remember that risk management's key and that you're not God. You can still lose. It's that 7 Sigma event, right? Those black swans that they're the ones that can kill you. So France and Greece. I'm not sure the latest of Greece. I don't know if Greece leaving would be the worst thing in the world either. Definitely Spain or France would be. So here they're talking about it. So you guys are looking 125. I think 125 is really, really good value. And we're not talking about stock here, guys. We're not talking about something which could get devalued and go bankrupt. Well, not traditionally. South American countries can. Geez, I got some strong disapproval ratings over in Greece. Well, basically, no one's happy with the handling of refugees. So sometimes Goldman Sachs put out little quant stuff. This is looks like it's Euro 2016. So just a little bit of a laugh. Definitely, it's not going to be England. All right, definitely not going to be England. So the quants are mathematicians and model makers that come out of do mathematics and econometrics, and then they go into the banks and they basically every now and again they do these sort of things. There's a big one in Australia for the Melbourne Cup. Comes from Macquarie Bank, our biggest private bank here. So it looks like France is favourites, huh? France Germany would be a cracking game. See if Goldman Sachs got anything interesting to say about the Brexit. I'm getting a little bit of Brexit fatigue. I mean, it's only 3 days in, and you know, what can they say? Something new? Someone tell us something, a way forward. You know, that's what I'm interested in, a way forward, not the reactions, not analysis, not where we're going, just how the political structure. You know, what's going to happen. I suppose what we're waiting for is Conservative Party to find a new leader. This stuff is a little option stuff is a little heavy for you guys, so we won't go into it. But you can sort of read into with the VIX moves, you can sort of read into how big a disturbance this sort of event is, and basically they're downplaying it. Not on the S&P though itself. These are quite large. So the skew is the difference between the put and the call options. So basically everyone's buying put options, right? Put options are the ones which are protect you to the downside. See, maybe that's why the VIX didn't have that record-setting day, because it looks like a lot of that movement happened in the VIX futures market, which is when the Asian session happened, which probably led to a little less volume, like they're suggesting, but a little bit more volatility. Oh, this looks heavy. Go look at that one day when I got a bit of time. Alright, so really this leads back to what we're going to need to talk about is the yen. A lot of you guys trade the yen. Probably don't know too much about the BOJ and what they're planning to do. So there's going to be new elections in Japan soon. There is some speculation that there will be more monetary policy. So another stimulus package, probably using the Brexit as a reason to get it through. Now the last big stimulus package we had from the BOJ was when the market was falling below 120. It was at like 116. It rallied all the way to 120. Lasted half a day and then smashed lower down to 110. So the ability, the faith that the traders now have and investors have in Abenomics really isn't there. And you're seeing them actually hold off on one of the arrows there, or the sales tax. They're struggling to get inflation. They've still got deflation over there. It seems like they're very hard consumer to stimulate. They just don't want to spend money. Let's bring it up just so we have something to chat about here. Dollar yen and Nikkei. So this is the rally that sparked the whole short covering. Tested 15,000, started the Asian session, started the actual open on the Nikkei here. Bang, bang, bang. This is when it started getting interesting. The second leg up. That's when you sort of see the kicks coming across on the DAX as well. Alright, so it's just continued on from that. Now I do suggest that the Euro session is going to have its own rally, so that's why if you're long already Aussie and Kiwi, just probably keep it for a little bit, see how high it can get. But if you're looking to sell like me or any of the pairs, just wait a little bit longer. $17.50, some 17,500 though, definitely possible. Alright, but back to dollar yen. What is it doing? Alright, so it's very sensitive to US yields, and US yields got completely smashed in the Brexit, the short-term yields. So there's very little chance now they're going to raise rates. So that's half the problem. That's why yen is the number one safe haven in these sort of events. That being said, multiple targets have been hit. And pre-Brexit, I was very bullish on dollar yen at 105. Okay, so I mean, I have to be. Wow, that trend is holding. That channel, look at that channel. You mean you have to be bullish down here, just generally. This is end of the world stuff at the moment, and below 100 is so dangerous for the shorts. So it wouldn't surprise me that this market may have put a low in, even for the year, and that you may see a decoupling here from further stock market losses and dollar yen losses, particularly if it's slow losses in the stock market. Volatility picks up, then yeah, you can have another little attempt down. Alright, now, does that mean that potentially pound yen has put a low in? I mean, not really. You can see the pound losses outweigh. You may see sideways action similar to, I mean, pound, this is months. It doesn't look like a lot, but it can go into really dull periods. And that's 3 months of just a 200-point range. If you can remember that time when it was testing 120, and then it went to another 2 months. Right, that's nearly 2 months as well of these really tight ranges. So perhaps we're going to have this little rally between 102 and 105 for a few months while the rest of the market plays. But generally, euro yen and pound yen are very low as well. So, and Aussie yen and Kiwi yen. Actually, Aussie yen, that's an interesting pair. We'll have to bring that up at some point. Probably do that another day though. Don't want to waste too much time on trades which haven't been talked about a lot. But Aussie yen is it's a favorite of mine, and it's the stars are aligning. If I'm neutral on the Aussie versus US, and I'm neutral to bullish on the dollar yen, Aussie yen's a very good way. It's got the carry, it's got the risk sensitivity, which means it will move quickly when the market's moving, and it will give you opportunities when the market falls to get better levels. And so, yeah, that's not a bad little pair to be playing, and you can build up quite a nice little carry trade on the Aussie yen, and we're at quite historical levels. Down in 74, I believe. 70. Oh, actually, no, we'll be 75 now. I haven't checked today. Where are you, Aussie yen? So I don't even check these currencies. The way I know where the prices will be just by doing the crosses. So if you check the currency, say, a couple days ago, right, you sort of know where it is generally. But the big levels for the Aussie yen is 80. And we did sort of smash it convincingly. There was multiple attempts above 80 during the previous few months. But I think the chances of further downside here are limited, and we're getting another huge support zone. So if we trundle along here and we get the right levels, I think you'll get good volatility and good trading. I don't think we can break much. This would require some sort of Chinese meltdown or RBA cutting, just for the hell of it. I mean, I'm a bit worried about the RBA doing that. They're a bit aggressive as central bank. And, rather than wait until August, because what we're doing right now with the Aussie dollar is we're waiting for the inflation data to come out from Australia. That's only released every 3 months. And that inflation data is coming out on July 27th. Okay, so that data means that if it's weak, you have all this speculation very quickly, similar to the last speculation that August will be the rate cut. And remember that it was under. They've got a band. They're targeting 2 to 3%, It came at like 1.6% last time. So they pretty much have to act if it's weak. But that's still a way ways. In this current market, 4 weeks is a fair bit of time. Yeah, so we're looking to be getting long. I'll definitely update you if I get long. I mean, long right now is not too bad, but we've missed some easy pips. Next little rollover. Anything below 75 has a little dip down, depending on why and how aggressive the selling comes through on the next wave. Yeah, so what I suggest is, just to wrap up, guys, wait for the US session open. They're probably going to rally. Look at the way that the euro and the pound react. Looking to sell a little bit higher on both. This wings trade's going to get stopped out. Wings. If you get stopped out a couple of times, I'm going to stop following your trades, okay? Yeah, so wait for the relief rally to exhaust itself, and then catch some pairs on the downside. You can look to do dollar CAD longs if the oil looks like it's rolled over with the stock market. You can look to do Kiwi shorts just because it's got so much room still to move on the downside. Probably not here though. Maybe up a little bit high. I would leave Aussie alone. And pound, of course, always. We're just looking to sell the pound. Or buying dollar. If we get this down to a little bit lower, actually, only a little bit lower here. 1300 tests. 1305 to 1300 on gold. Could be some great risk rewards. Okay, so those are the ways I'll be looking to get involved in the market today. It's a little late to chase though, boys. A little late to chase. Any questions? Yeah, they could be selling at the open trend line. Could definitely be selling at the open. But US traders are pretty aggressive, and given the sniff of a relief rally, I think that they are going to attempt to go higher. Where's S&P? Maybe 2020. You don't really want to be selling the US stocks anyway, because they're the natural safe haven for the global markets. You want to be, whenever you see them exhaust themselves though, you jump across over to the DAX. It might be up at 950, even previous highs again. Where are we at? Where are you? 9.7. No, that's too far. You want it to actually be lower than that. So about 9.5, 50, 9.5, 40. Yeah, it would be just checking the price action on the right if you want to sell stocks. Usually the way to trade the DAX though is to wait until the open the next day and look to sort of sense how the market's reacting. Yeah, trying to sell before in the US session here. You have a big gap in the Asian session where the markets close for these particular contracts with most brokers. So yeah, that's a little dangerous. I actually have a buy limit down here. I see a lot higher than that, Armin. I see a lot higher than 1330. 1375 to 1450 for gold. think gold's just beginning its rally. Remember that it's not that far away now that we got the next NFP as well. So the market will eventually go back to watching the US dollar and the Fed, and then you're going to have the market reaction to that, and could easily see more weak numbers. The unemployment numbers are trending lower in the US. So we're not just buying because of all the safe haven fears. We're buying because US dollar could be weak structurally. Alright, that'll do, boys. I'll be back tomorrow, same time, 9 GMT.